So Bitcoin reaches all-time highs, but I think we should be a little bit more cautious with this market than the hype that surrounds it. Now, yes, we've got the Bitcoin ETF. Yes, we've got the potential Ethereum ETF coming in. We're seeing all-time highs with Bitcoin. We've got the Bitcoin halving in just over a month's time. Traditional thinking would be, as the Bitcoin halving comes, we move into this mega bull market where we have substantial raises in prices in the entire crypto market, beginning with Bitcoin itself. The reason why I think we need to be much more cautious than a lot of the commentators or the crypto world is saying is everything else that's going on with the financial world now that wasn't going on in the previous cycles. Now, do I still think we're going to continue to see a rise in prices? Not financial advice, over the next month or two? Perhaps, yes. But what we're missing here is there are a number of dominoes that are in play where the crypto market will be used and dumped on in the event things happen with the banking system. And I've explained this in many videos, but you have to look and understand at the potential bank collapses that are coming. You need to understand that the banking crisis that was covered up last year with the US government holding out and providing the liquidity that's required for the banks for the last year ended yesterday. And we might not see the domino of that immediately, but 30, 60, 90, 120 days later down the line, we're likely to see that. You also need to consider that central bank digital currencies are coming. Now, central bank digital currencies linked to some cryptocurrencies in the market. We've just seen a rise in price with XRP and XLM, and perhaps they will be in some way used within the CBDC market. But to get to that point, when those CBDCs come into play, a lot of other dominoes can potentially fall in the interim. And I think that's what we need to focus on here. When central bank digital currencies come into play, whether that is a central bank digital currency or just a digital currency, which you're seeing with Japan, for instance, at the moment, where they've got a digital currency with a consortium of 70 different corporations in Japan, well ahead of the game in comparison to some of the other central bank digital currencies. When we see this come into play, what I perceive will happen is at that point, those digital currencies are going to be backed against the currency of that specific country, which means what I foresee occurring is that they are going to start to look inward rather than outward. And what I mean by that, when they look inward, they're going to start to sell off debt from other countries, focusing more solely on their own. In the instance of Japan being one of those countries which have got a central bank digital currency coming, they have currently, I believe, the second largest holding in the world, or even the first largest holding, in the world of US Treasuries. Now, when they dump these US Treasuries, that's going to put a real pressure on the US dollar. Now, firstly, why does this link to the crypto market? Well, when it puts pressure on the US dollar, you're going to look at the stable coins, the stable coins within the system, forcing out that pressure, because the liquidity could come out of the stable coins at this point and then force pressure on Bitcoin as well. Now, we also need to take into consideration as if there are disruptions in the market, and I foresee that a stable coin collapse is imminent, and that stable coin collapse being imminent is then going to force in regulation for stable coins, because we need stable coin regulation linked to central bank digital currencies, if you're following where I'm going here with this. When this occurs, will you potentially see a massive drop in the cryptocurrency market due to the collapse of a stablecoin? Now, my my concerns are with Tether, and particularly Tether's holding of Bitcoin, because in the event Tether has experienced pressure, exerts pressure, they're going to sell off a Bitcoin holding, which in turn is then going to cause pressure on the market itself and enforce what I see as this black swan event that occurs. What we need to consider is, although I genuinely do believe that the cryptocurrency market is the future of the financial system, the majority of it is going to get wiped out. There's going to be a few cryptocurrencies which are the core holdings. There's going to be regulation upon regulation coming into play. And in that period of time, we're going to see the beginning of the end of the fiat system. And because of the nature of currently the fiat system being not tokenized, banks having potential failures coming in, and what I find is the key point here is banks not having the instant liquidity, whereas the cryptocurrency market trades 24/7. If a bank wants to potentially sell out of a specific asset any time, it's going to take T+2 days for that settlement to occur. Now, if there are these bank failures coming in at that point in time, it's going to put a hell of a lot of pressure on the cryptocurrency market, and that's where they'll sell first. You may see in this instance, though, where money flows out of certain parts of the existing system, the crypto system, to coins that can provide liquidity. And we all know in that instance that's XRP and XLM. So, to conclude, yes, we are in this cycle. Yes, there's opportunity. Yes, I do believe cryptocurrency is the future of finance, albeit very small amount of coins that are on the market right now. But we do need to consider that black swan event where the existing fiat financial system is going to be hit. You're going to see bank failures and a destruction in the cryptocurrency market in an interim play to bring in new regulation for the future. I would love to know your thoughts in the comments. Hope this helps.